Welcome to the March edition of Bailey's Market View. I'm Johnny Sinclair, National Director of Residential. Residential sales activity across February has remained high as the market continues to perform. According to the latest Real Estate Institute data, annual house price inflation is now running just above 19%. To compound matters, stock levels are low, with homes selling much faster than the norm, as demand continues to outstrip supply. In analysing Bailey sales data, our transaction numbers for February were up 10% year on year, but sales values up 65%, a further reinforcement to the buoyancy we're seeing in the market, particularly in the higher price brackets. With property values being such a hot topic, I'm now joined by Carl Watkins. He heads up the valuations division here at Bailey's. Well, it's no secret that house prices have gone up over the past 12 months. As a valuer, what are the key processes that you do to determine true market value?
Thanks, Johnny. That's a good question. At the heart of the majority of residential valuations that occur, the valuer will be undertaking what we call a sales comparison method, comparing recent sales activity in the area to the subject property and making adjustments where required to determine your value. Now, at the crux of that, we're really relying on the accuracy and speed of data that we can get our hands on, analyse, and therefore turn around our valuations. So a key focus for us at this point of the market, with the market moving at such speed, is trying to ascertain sentiment, trying to keep on top of where values are going, because they're moving very quickly. So often what we've found in the past is that the data, there's a lag between when a property transacts to when we might be able to see that in our systems. So key focus for valuers, not just at Bailey's, but certainly a focus for us within the organisation, is to keep that relationship building between agents and, of course, banks and lending institutions, so that we have the most accurate data at our hands. If we don't, then we stand the chance that we might be undervaluing given the speed of the market at present.
And the market surely is on fire at the moment, and you'll be playing a huge amount of catch-up. I've noticed that homes that have got a renovation angle are selling for a premium. Do you take that into your metrics?
Yeah, I think the vast majority of purchasers are probably not maybe geared up or have the interest to redevelop a house or perhaps spend some additional money getting it up to their dream home. So what we're finding is clients and potential purchasers are looking at properties that might be a little beaten up, might be a little bit obscure, there might be some issues with the property itself that will turn away, even if it's just a fraction of the normal purchases, and they'll undertake that. They'll price in their margins and so forth, and what you're seeing is that the price points of those properties are well positioned, yet they might show a bit of a premium because the potential purchaser, who does have an eye for redevelopment or refurbishment, is pricing that into their metrics, and they can see some potential moving forward.
Carl, prices have gone up across all price brackets. Of the properties that have gone up the most in value, are there any common themes that you're seeing?
Yeah, well, certainly location is a big factor, but if you remove that, what we're seeing is probably the aesthetics of the houses that are performing really well. The aesthetics of those, probably what may be differentiating between that and the house down the road that may not be quite up to the same standard. And what I mean is things like landscaping, modern kitchens, bathrooms, modern paint jobs, even joinery, all those sort of factors that contribute to the look and feel of a home is what are pricing those or making them, those houses, positioned towards a higher price point.
Sure, so staging of homes, the preparation leading up to the sale of the property is absolutely critical in this current market?
I would have thought so, yes. I think staging goes a long way to building on purchaser attachment to that particular home. They can start visualising their family life there, for example. So a well-staged home that's well presented with nice gardens, I believe will sell for a higher price point than a house that maybe lacks some of those features.
Makes sense. And finally, it's good to see resource consents are on the up, which is fantastic news. The market activity at the moment is buoyant. In the foreseeable future, however, do you see the possibility of values potentially dipping?
If you look purely from a supply-demand equation, I don't believe in the short-term future the resource consents or building consents that are being issued are probably enough to plug that gap, and certainly what might compound it further is when and if those borders open, we may even see a flood of people looking to migrate to New Zealand or expats returning home, which again is just going to add further pressure into the metropolitan areas such as Auckland and Wellington, Hamilton even. These centres where people want to live, where the workforces are, I think we're always going to have a bit of a lag when you look at supply versus demand. So my gut feel says in places like Auckland in particular, no, but perhaps maybe in other regional locations you might see a little bit of a slowdown.
Excellent, I really appreciate your insights, Carl. So, with little sign of market slowing down anytime soon, now remains a great time to sell your property. So please contact your local salesperson if you'd like further information.